Well, hello there. Welcome to the webinar, Getting Ready for Tax Season. So this is going to be exciting, and we're going to talk about a whole range of topics today to get you ready, particularly for our North American friends, for the next couple of months before we get started. So first of all, let me just share my screen and just make sure we can see what screen are we seeing. And we're going to do that one there. Cool. Alrighty. So this is going to be a lot of fun, team, and I want to make it super interactive. So first of all, quick introduction, and then you're going to introduce yourself, and then we're going to get into it. So my name is Rob Nixon. Some of you I've met looking at the attendee list. Some of you have not. Hello, Debbie Miller from Colorado. Always good to see you. You owe me a game of golf, Debbie Miller, by the way, if I recall. So over the years, 26 years now, working with accounting firms all over the world, 18 countries so far. That's been exciting. And written a few books. So this one came out called Accounting Practices Don't Add Up, Why They Don't and What to Do About It. This came out in 2011. Remaining Relevant came out, which was the future of the accounting profession. That was an exciting book. That came out in 15. This one came out in 2017, The Perfect Firm. And drum roll, please. Coming out next year, new book called The Wealthy Accountant. It starts off as an oxymoron, and then it gets real to help you turn what you do into wealth. So that's a bit about my background. When it comes to accountants, my life has been accountants, and I have a number of beliefs when it comes to accountants. Number one, I believe you're the number one in numbers, not a piece of software. I believe accountants should be the ones that are producing the numbers and advising on those numbers as well. I believe that you can be and need to be the trusted advisor when it comes to business. No one else has got this trust, right? Number three, I believe you can help your clients build amazing businesses, absolutely amazing businesses you can help them build, right? When you get on the front foot, when you be proactive, when you analyze the numbers, you can help them. I've seen you do it time and time and time again. You know, I've educated 185,000 accountants in 18 countries, and you are amazing, but you're just stuck in the weeds doing work that has much value, and so consequently not really helping your clients. I believe that you don't earn enough money for how smart you are and the value that you add. And lastly, I believe that you can help your clients make history instead of writing up history, and as a result of that, you can change lives. So there's a few beliefs that I've got. Now, I'm coming to you today from Brisbane, Australia. It is just past 6 o'clock in the morning for me. I will just put the camera out here. As you can see, the sun's up. I'm in my clubhouse that I've built in the front of my golf course. So I'm from Brisbane, Australia. I want to know where you're from. So Debbie's already popped it in the question thing. Just pop in the question box there. Hi from wherever you're from, right? Wherever you're coming from, pop a note in there, and just so, because in this particular piece, we are going to be interacting all through this webinar today. So where have we got? We've got Stockholm, Sweden. Wow, cool. Toronto, Texas, St. Louis, Topeka, Kansas. Excellent. Irvine, UK. We've got USA, Langley, and Virginia. Cool. British Columbia. So we've got UK, Canada, USA, Sweden. Another from Canada there, the Edmonton Oilers. Thank you, Jeff. All right, so Jacksonville, cold Canada. Yes, Glenn, it is nice and sunny and warm here. It's going to be about 29 degrees and sunny in Brisbane today. So let's get into it. Wherever you're coming from today, welcome, welcome, welcome. Now, what we're going to do today is something a bit different. So I am going to be interacting with you through the question box there that you just popped your location in. So during the course of today's webinar, I've really only got 4 key points to make. Number one is getting your head in the right space for change, right? Number two, we're going to talk, this is all about getting ready for tax season, right? That was the topic of the webinar. So getting your head in the right space for change. Number 2 is going to be all about pricing, getting ready for that. Number 3 is all going to be about workflow, what you can do in the next 2 months before busy season kicks in again. And number 4 is going to be what's called gap meetings, which is how to interact with your clients during the next time you see them in tax season. So that's what we're going to cover. Now, a bit of confusion, I think. Some of you think this is a 1 hour webinar, some it's a 1.5 hour webinar. It's going to be between 1 hour and 1.5, right? And that depends entirely on the volume of questions that you've got. So we're going to make it very free-forming and free-flowing and driven by you in a sense, right? I need you to participate. The more you participate, the more value you're going to get. Now, first of all, I'm going to start with a question. And that question is in line with number 4 belief, is that I don't believe you make enough money for how smart you are and the value that you add. And all the research I've been doing for my new book, The Wealthy Accountant, I've pitched it as how to make more than $1 million profit per year while working less than 500 hours. That's good income, right? But there's a balance between time and money. And so we're going to talk about this right up front, right? To get your head in the right spot, because I believe you should be making more than $1 million profit per partner and working less than 500 hours. That's the measure of an accounting business, not an accounting practice. So first question I've got, and I just want you to pop 1, 2, 3, or 4 into the question area, right? Just put 1, 2, 3, or 4 when I give you the answer to the question, all right? How much profit in 2019 did you make per partner? Is it 1, less than 250,000, 2, 250 to 500,000, 3, 500 to 750, or 4, 750 plus? Just put a number in, and let's just see what we've got. I love that one, Yahoo. All right, we've got lots of 1s, we've got a couple of 2s, we've got some 3s. All right, I'm not going to call you out, so this is your business, no one else's. So keep it coming, just see what you've got there. All right, lots of 1s, mainly 1s. I'm going to say about 80% 1s. We've got about 15% 2s and a couple of 3s. All right. Now I don't know about you, but whatever answer you put in there, I don't think it's enough, right? This is my view, right? This is my opinion. You know, you've got a lot of clients who are nowhere near as smart as you, who don't add as much value as you, who make more money than you, right? And it's not just about the money, right? It is all about the balance between time and money, right? So the balance of making money, absolutely, right? We need to make money, but at the same time, we don't want to be working our butts off making the money. You know, I see accounting firms, you know, it's easy to make $1 million profit in an accounting practice. Just have the partners, you know, chunk out 2,000 hours at a few $100s an hour and get some leverage, but you're working really hard, right? Let's have a balance between time and money. So my second question, as we get warmed up here, my second question is going to be, how much working in time do you do per year? So let me just define working in versus working on. So Michael Gerber wrote a seminal book in 1986 called The E-Myth. And it was all about the premise of you should spend more time working on your business than working in your business. And if you spend more time working on your business, then you won't need to spend as much time working in your business because the business will work better without you. Get the idea? You've heard the term, working on versus in. So here's my definition of working in an accounting firm versus working on an accounting firm. So we've got our total hours that we work, right? Could be 1,500, 2,000, 2,500, whatever it is, our total worked hours. In time would be inclusive of anything client related except sales, charged or not charged. So reviewing of team members' work, doing the actual work yourself, anything client related, right? Management of the business, right? So that includes administration, it includes dealing with vendors, it includes dealing with accounts receivable, work in progress, right, etc. And anything to do with managing the team, workflow, motivation, etc. All these are in activities versus on activities, things that are going to grow and develop the business. So sales time, right? Actually, one-on-one or in running a seminar, selling was an on activity. Leadership versus management. So leadership being driving performance of the business, not doing what the business does, right? Management, we can hire management. So effectively, working in time, we can hire people to do that, right? Working on time may be your unique skills, right? So product development. Think of the on time as anything that creates leverage. So with that definition, in versus on, how much in time do you do per year? 750 or less hours, 750 to 1250, 1250 to 2000, more than 2000, please pop an answer into the button. Check. What do you call it? Questions. So we've got, okay, so then now we've got the other end of the scale. Best score so far is a 2. We've got a 1. Well done, George. Loving that. I hope the other correlating one on profit was just as good as that one. Mainly 3s coming up. We've got some 4s. We've got mainly 3s. Keep going. If you haven't put it in there, just an estimate is fine. I'm not going to hold you to it. We got mainly 3s and 2s. I've got a couple of 2s. We've got 2 1s, 3s and 4s. Now, what's interesting about this is you're about to work out a number. And that number is called your profit time index. And it's a balance between making good profitability and not being the main person, assuming your partner's listening in, not being the main person driving the profitability, as in doing the profitability, right? So here's the equation, and you've just worked out the rough answer because you're about to divide that one into that one, right? Profit time index, to me, I'll just actually explain a little bit further. Profit time index is a number I invented, and this to me is the ultimate output number. With everything that we do, as the owners of this accounting business, right, this is the outcome number. We've got outcome numbers like profit, cash balance, revenue. These are outcome numbers. But profit time index to me is the ultimate one because it indicates how well of an accounting firm we have running right now. As in how well of an accounting business this one works effectively without us. Or it works in a way that we can have time off and it still produces. So the equation is simply your profit before partner salaries divided by the total in time by the partners. So for example, let's say you make $500,000 profit and your partner average in time is 1,000 hours, therefore $500. Let's say you make $1 million profit and your partner in time is 2,000 hours, then it's still $500, right? And so on and so forth. So as you work this number out, and I started thinking about this year, and with all the firms that I'm coaching, we're tracking this every single month because ultimately the measure of an accounting business is one where the partners aren't doing all the work, they've got leverage, and the business produces great profitability for the owners. So I'm going to take you how we get to a higher number in a minute, but first of all, to get your head in the right space, let's have a look at what the number is. So you've all got your number because you've got your in time and you've got your profitability. You can divide that into that and just pop in approximately what your number is. Then I'll give you some definitions around your number. So just in the question area there, just put what your number is. By the way, it doesn't matter what it is. For some of you, this is the first time you've seen this number. And then I'm going to give you a rating scale. So just quickly pop it in. It's the profit time index. Interesting. Interesting question. What would happen if we took the partner chargeable time away from your revenue and profit? Would there be much left? All right, we've got some lows, we've got some highs. Oh, we got an exact number with cents. Great. Keep it coming. Not about next year. I want this year. Yeah, no, it's nearly the end of the year. All right, I think that number's incorrect, BJ. All right. Oh, no. It's profit divided by in time. All right. Cool. Okay, so you've got your number. What does the number mean? Well, if you're between 0 and 250, then you're pretty much overworked, underpaid. Number two, 250 to 500, you're starting to make a little bit of money, but you're still working too much. We move up the scale. 500 to 1,000, you might be making some money, but what about the time? 1,000 to 1,500, leverage has kicked in. It's going great. Interesting, around 4 and 5 here, sometimes you get a bit too comfortable where you're making 1,000 to 2,000. You might be doing 500 hours. Therefore, you might be making some really good profitability here and some good time. And it's going to be better around 3 and 4. It's going to be about $1 million profit per partner. Now, what I've seen with too many firms over the years, after coaching now for 13 years and working with the profession other ways as well for 26 in total, is when you get to around $1 million profit per partner, some of you take the foot off the gas and you don't keep pushing through. There's more in it from here, right? You get to purple, 2,500 to 5,000. Double it from here without doubling the time. One of the great clients that I coach is in Kentucky, and she, as a sole practitioner, is $6,200. She works 100 hours a year, actually literally just works 100 hours a year, and makes nearly $700,000 profit. This business runs without her. And there's more in it, right? That particular client, who I've been coaching now for nearly 18 months, she's got a goal of 75 clients at 75 grand each. And she's into her early 60s with a bee in a bonnet. There's more in her yet, right? I know there is, and we're helping to do that. You get up here to around 10,000. I know one firm at 10,000. Corporate structures in place, and it's going great. Now, here's what I want you to do. Today, as we nearly end 2019, what an opportunity to plan for 2020. You can change your number here. And of course, as you change your number, it goes up. Your time goes down, ideally, and you've got a more sustainable business. So I'd like you to set a goal right now, right? What do you want? And then we're going to get into the how-to. What do you want your profit time index to be realistically? And by the way, I think with a proper coaching and development program, you can jump 2 colors a year quite easily. Jumping 3, so you think about every quarter or every 2 quarters, we jump a color. Right? Now with the firms I'm coaching, we have a recognition, a bit of a competition going on with this. But what do you want your goal to be realistically for 2020? And then I'm going to take you through the detail of how we get that. Pop in a number. What do you want your goal to be? We know what it is today. What do you want it to be? So we've got threes, we've got numbers here, 500, 250, 1,500. Cool, 1,600, 500, 650, purple, colors 10 times, so 500, interesting, 125. Good to see some ambitious people here. Pop it in, double it from where you've got, interesting. All right, so what we've got, which is really good news, is we have some ambition in the room, right, or online. And that's really good news. So by the way, I've just done in dollars for a couple of you Europeans in euros or pounds I see here. I'm just straight dollars. Now, so how are we going to do this? So I started thinking about this number in April this year, and then I started thinking about, okay, well, what are going to be the key things that we need to drive? And by the way, early next year, there's going to be an online quiz that you can take with a full report on my website, robnixon.com, that you can see where you're at and see what you've got to do. It'll be all interactive. That's coming up first quarter next year, so we'll let you know about that. But here's a summary of how we drive that number forward. Let me take you through a macro view, and then we're going to focus on the three key content pieces, because this first part is making your head in the right spot about change. So as we look at why you do what you do, after tens of thousands of accounting firms, I think there's three words: meaning, freedom, and lifestyle. The meaning of work that you do, it has good meaning. The freedom to do what you want to do, and to create a great lifestyle for you and your family. To me, those would be the objectives of why you do what you do in this accounting business, right? We have meaning and contribution. We have freedom to do this sort of work and work wherever, and we've created a great lifestyle for you and your family, right? Now, along the way, we measure some finite numbers. We measure average hourly rate, we measure efficiency, we measure number of clients, average fee per client, we measure revenue, profit, cash, and of course, as I mentioned, profit time index. Now, to move the profit time index as fast as you want is going to depend on a number of factors. One's going to be implementation speed, one's going to be implementation effectiveness, and one's going to be strategy and content and methodology that you implement. So depending on your implementation speed and effectiveness, and 32 key things will determine the numbers going up and more meaning, more freedom, more lifestyle. So as I look at this, I look at 4 key chunks of content and methodology. One is fixing what we have to do today, fixing day-to-day operations, right? Minimizing time dramatically, minimizing time. Scaling the business to whatever size in revenue that you want, and leading your team with proper leadership into the next decade. Far out, we've got a new decade coming up in 2 weeks. So within each of these 4 areas, there are 8 sub areas that are vitally important to move your profit time index, to build a better accounting business, to have more meaning, to have more freedom, and to create a better lifestyle. So I'm going to go through all these just really rapidly, and then we're going to focus on 3 of them, which will be the big 3 things I think to get you ready for tax season coming up. Because you've got 2 months, you've got plenty of time to get a lot of things done. I want to be as helpful as I possibly can today. So first of all, fixing. Pricing up front, price increase. None of you charge enough for what you do. We're going to talk about that today. Value pricing, and we're not pricing arrears anymore. No more time-based billing in arrears. Value pricing. Pricing projects appropriately based on the contribution that you make to your client. Recurring revenue packaging. As you look at your business today, as you look at the known work and the known entities, we should be on a monthly plan with our clients with that, right? It's so much a month. It's not, we've got 3 types of upfront pricing. We've got recurring revenue by the month for the known work and known entities. We've got project-based pricing. So we need a budget and cash flow separate to out of scope, and we price that appropriately. And then we've got fixed fee individual transactions, like an income tax return, for example, which is a one-off. They're all priced up front. We should be aiming for more than 80% of our revenue for the year as recurring revenue by the month, by the month, by the month. Managing scope creep and scope seep. So making sure you're charging for everything that you do, right? Making sure that you're calling clients when it's outside of scope. A bit like when you go to the mechanic to get your car serviced, they call you a couple of hours later and say, hey, Rob, the brakes need doing, the tires need doing, or whatever, right? That's scope creep, scope seep. Lock-up reduction. So work in progress and accounts receivable. This is cash. We've got to fix that. Client mix. Only A-class clients. Life is too short. Life is too short to deal with anyone but an A-class client, in my view, right? If you've got an abundance mentality, not a scarcity mentality, then we should be only working with A-class clients. Client service program, your customer service program. What is it? What's it like? And lastly, your communication process and structured communication process with clients. So when we do the quiz first quarter next year, you'll be scoring yourself out of 10 on these. There's going to expand to 40 questions, and you'll have a score out of 400, right? And these are the key things to fix. Minimize. So for pricing up front, the key thing now is to dramatically minimize the time that it takes to get the job done. That gives us higher average hourly rate, gives us more capacity because we're being more efficient. So what do we need to do that? Workflow management, thinking of your workflow like manufacturing. Client excellence coordinators, having administrative people do the administrative work associated with the accounting work. Accountants spend 2 to 3 hours per person per day doing administrative tasks associated with the accounting work. Time budgets on all jobs. Many years ago when book number 1 came out in 2011, I actually wrote a comment in there which I wish I did not. And that comment was that you should get rid of timesheets. You can't go back and change a printed book, but I was wrong, right? Getting rid of timesheets is such a bad thing. It's just a mess. Getting rid of hourly charge rates is a different matter altogether. By having an hour's budget on a job, you've only got 10 hours to do this task. People fill the available time with what work they've got to do. Not laissez-faire. Not you've got $5,000 worth of time to fill this task. Guess what happens? Miraculously, it comes out at $5,000. How did they do that? Did they start? Did they stop? Did they go slow, go fast? There you go, boss, $5,000, right? No, we're going to drive the time down, and we need time sheets to do that. We do not need charge rates to do that, right? We do not need hourly rates at all because we've got a fixed fee. How we get to that fee, I'll talk about later on, but we need a time budget on jobs. Technology for your firm, making sure the firm is all cloud-based. Clients all cloud-based, super efficiency, right? Systems and processes will help you minimize time. Learning and development, training process with your team members to minimize time. And the partner time, where 30% of partner time is in high-end advisory work, 60% sales capacity, 10% in a leadership function. Best use of partner time. We're going to minimize time. We're going to fix up day to day. We're going to minimize time. Then we're in a position to scale this business to whatever size we want. If you want a $1 million firm, $5 million firm, $10 million firm, it's whatever you want, right? So how are we going to do that? Well, first of all, it needs to be brand development. What does your brand stand for? What are you all about? What are you the best in the world at? Client goals documented, understanding what your clients want, right, to achieve. I believe that your job as the trusted advisor is that all clients should be buying all services that helps them achieve their goals. Find the opportunities. Find opportunities in current work. You need a belief system in this current project. There's a potential other project. Always on the sniff for new opportunities. Niche markets, being the best at that particular market. My niche market are accounting firms, right? I'm the best in the world at financial performance for accounting firms. I know that because of the track record. I've coached now 510 accounting firms, added $910 million worth of profit to them and counting. We'll hit $1 billion, should hit $1 billion this year actually. Lead generation, A-class leads only. Generating A-class leads. Productization, whatever your service is going to be, productizing them so that others can deliver them. Sales process and sales skills, making sure that we've got a sales process and we're trained on skills. People, onshore, offshore, and outsource, all three. Offshore team to do processing work and accounting work, onshore team to do high-end advisory, and outsource team for project work. Scaling, growing, right? Building a business to whatever size. What is the point of trying to grow an accounting business or buy another one if the current one doesn't work so well? I see time and time again, firms want to scale. Let's go and buy $1 million firm, right? We're doing $2 million now. Let's double up, right? Let's go 50%. Yeah, you can do that, sure. And there's plenty of finance companies that will lend you the money. But you're going to tack on onto what you've already got, and what you've already got may not be optimized, right? May not be working the best it possibly could. Or let's do this aggressive marketing campaign. You know, I was working with a firm earlier in the week, and they said, well, when do we turn the marketing machine on? I said, you're not ready for that yet. We've got too much low-hanging fruit in the client base. We're going to fix this up. Let's spend the next few months doing that. And then around May, we'll turn the marketing machine on. Leadership, leading, 8 key areas. Vision, mission, values. What do you stand for? What are you all about? What's your painted picture? Organizational structure. What is the structure? Who is going to be the boss? Who's the CEO? Who's the business manager or the integrator? What are the core teams that you've got? Who's accountable to who? Who's the structure? What's your operational plan? What's your one-page plan? By the way, a lot of tools are behind this that would be useful for you as well. What's your operational plan that people can see on one page what the plan is, what we're all about, right? What's your reporting and accountability function for your team members? You want to scale this business, we need some people. So how they're reporting, how they're held accountable. What's your team culture? What about team performance, different from culture? Are they performing optimally for their role so that they can contribute to the clients, so they can contribute to the business? Themes and celebrations. How do you celebrate? You know, what do you celebrate? And lastly, your meeting rhythms. These would be the 32 key pieces on 8. You nail these, you master these, right? You get to a 10 out of 10 on all these. Not just it's done, but we've mastered it, right? Then you will discover that your numbers will increase, your margins will increase, your time will decrease, your profit time index will increase as well. So let me know if you like this. Just pop in hell yeah, or no, it's a lot of rubbish, or it's really cool. Something to give me some feedback as I take a sip of water. Or an amen, whatever suits your style. Keep it up. All right. Well, lots of stuff. You're right, Jeff, lots of stuff. Spot on, love it. I'm not going to explain what you just said, Doug. Like it. I have a lot. Yes, you do have a lot to do, Mark, right? That's very cool. Too much at once. Okay, let's talk about this, right? Cool. We've got a couple of comments about being a bit overwhelmed, right? So here's the thing. I get it, right? Your profit time index score is not that high. You want to do more, and you look at this and you go, because by the way, these are the big projects, right? And each one of these can take a considerable amount of time. And you look at this and you say, okay, to master that one page right there, to systematically master it is probably 3 years. It's probably good 3 years, a bit like a university degree, an MBA, or whatever you've got. It takes time to master and become an expert in your space. You are an expert practitioner. You're a tax consultant. You're an advisor. You're a great accountant, without a doubt. But it's taken you quite a while to get to that mastery level. What we're talking about here is business mastery. We're talking about running a great accounting business. That takes time as well. Just doing what you've always done isn't going to move the needle to where you want to go. When I asked you that question about your profit time index, most of you are about double where you were, just looking at the questions coming through. Most were about double where you were. So to do that, you've got to change, right? You've got to have different activities. You think about this, right? The state of your accounting business today, or your accounting practice, right? Whatever you've got going on, the state of it today is a direct result of decisions, good and bad, actions or inactions of the past. Where you are today is a direct result of what you've done in the past. So if you want to change your future, then you've got to change your projects, your activities, the way that you do things. So Rob's got a question. Great. We all love A-class clients, but A-class clients demand A services. would you say that you need to work up to win all A clients? I think what you mean, Rob, is that would you need to provide a different level of services for A-class clients? Not necessarily. First of all, you need to define what you want to deliver, right? And you can find A-class clients if they're all 1040s, for example, all income tax returns. You decide what you want to deliver. You decide what an A-class client looks like. I believe, right, this is my belief, that your job, as I said before, is that all clients should be buying all services that they need that helps them achieve their goals. That, to me, is the role of the trusted advisor. But it doesn't mean they're buying them from you. You could be coordinating all the services, but outsourcing them to other providers as well. It's entirely up to you what you provide. But you describe what does an A-class client look like, and then match services that you want to provide to them. You don't have to do everything, right? And that's why I didn't just put under productization of services, I didn't just put business advisory services, because yes, that's important. But I've got firms that got a law firm internally in the firm. I've got firms that got marketing services, right? Because they want to deliver that. I've got a firm that offers sales training, accounting firm, insurance services, financial planning, finance, lending. You decide what you want to deliver in line with what sort of client you want to serve. There's no right or wrong answer for this. All right. So the three things I want to talk to you about today. Number one is going to be all about pricing and packaging. We've got 2 months to go. We've got a great opportunity to reprice and repackage. Number two is workflow management, which is going to be all about manufacturing and doing the job faster. And then lastly, client goals and find opportunities. So those are the three pieces. As I think about, you've got 2 months to go. Effectively, for our North American friends, you've got 2 months before busy season kicks in again. And in 2 months, we can do a lot. We can do a lot. So first of all, let's talk about pricing and profitability. And I'm talking about what you can actually do differently to get ready for tax season coming up. All right. So first of all, let's talk about profit per client. Profit per client. Here is the old way of looking at it. It took me 28 hours to do the job. All right. 28 hours to complete. I had a charge rate of $175 per hour. Therefore, the price popped out the end at $4,900. Time-based billing in arrears was the model, and the profession's grown up on this model. This year, the billable hour time-based billing model started 100 years ago, right? This year, 1919. It's a stupid model, right? You are directly rewarded for how inefficient you are. Client doesn't know the price, and it's just got. I'm not going to go into why the model's bad, right? But here, and if we want to drive it up, here's what we're going to do to fix it and make more money. We're going to price the job in advance. It may be the same price at $4,900. Now we are directly motivated to do this as fast as possible, hence the minimize the time. And let's say we could take this job from 28 hours down to 20. Now the average hourly rate is an output number of $245. The average hourly rate as a number should be increasing every single month. Every single month. Pop, 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 pop. No matter how busy or not busy you are. It's a direct result of your top line price and your internal efficiency. So whatever it is today for your client work, might be 125, might be 200, whatever it is, then we want to move that number all the time, right? And my goal is to get you over $500 for that particular number. So now what do? We've got a client. We're going to sniff out a new project. And let's say that new project we sell for $3,900. And we use the 8 hours that we gained in the last project to facilitate this project. We didn't price it based on time-based billing. We priced it based on what we believed it was worth. And for this particular project, we got an average hourly rate of $487. So combined, We've now got a client worth 8,800, same 28 hours, but the margin is 315. The margin previously was 175. Now, with more efficiency, new project, and the same price for the same project, we now have a margin of 315 for this client. We must know the average hourly rate split 4 ways. Number 1, we know it by invoice. This invoice has got $2,000 on it. It took 10 hours, therefore $200. This invoice has got $2,000 on it. It took 5 hours, therefore $400. By invoice. Why did this one 200? Why is that one 400? Number 2, by client. A simple spreadsheet. Column A is client name. Column B is revenue that you get from that client. Column C is the hours taken. Column D is B into C, which is average hourly rate per client. We must know, number 3, by person. This person is average because it's got nothing to do with the hourly rate or the salary. It's got everything to do with the efficiency of the work. This person's running at $425. This person's running at $125. What's the difference? Why is one 3 times more efficient? And the 4th one is by period, by week, by month, by quarter, by year. How much extra profit did we make on this client? We made an extra $3,900. We made an extra $3,900 because the time taken, the resource allocation was identical. I want you to start thinking of your business in this way. We price up front, we drive the time down, we refill the capacity with new value-based fees, and then we do it again. And then we do it again, and we do it again, and we do it again and again and again. And this is how we drive the profitability up. And it's margin progression, right? We're driving margin of average hourly rate. And the margin that we are driving and how we do that is going to depend on a number of factors. First of all, is going to be your value belief and your value contribution. And it's also going to be sequential steps to drive up margin and average hourly rate. There are 6. 3 below the waterline, 3 above the waterline. So first of all, you used to price in arrears, and now your average hourly rate aware, and we simply increase the charge rates to get a higher margin. You can do that today. If you are in box 1, we predominantly price in arrears, and we know what the number is. If we take all of our client hours into our revenue, 125, simply put the charge rates up by $20 as we make this transition. You can do that today. Getting ready for tax season happens today. It is nearly 1:45 Pacific time. It is nearly 3:45 Eastern time. We're going to finish in about 45 minutes. 30 minutes after that, you can do point number 1 straight away. Number 2, we still price in arrears, and now we have an average hourly rate target, and we might introduce some new services for that to get that target. Number 3, we do some price up front, and we start to get some write-ups. Write-offs should not exist, right? Discounting before billing is just business waste. It is just slack, often gutless partners believing they can't charge for what that project is. Pricing up front, we start to get write-ups, not write-offs. Then we get to 100% price up front. We can do that in the next 2 months. We can do that in the next week, right? What an opportunity we have. Here we are. What is the date today? It is the 19th of December in Australia, the 18th of December in North America. And we can, in the next 2 weeks, we can send a letter to our clients to notify them of the new changes that we used to do it this way, now we're doing it this way. Here is the last invoice you'll ever receive. And on the 1st of January, we turn the year with 100% price up front. Now we're going for maximum efficiency. We're going for maximum efficiency here. So, but we still got charge rates. We still have hourly rates, right? And unfortunately, when you've got hourly rates, your mind is in an hourly rate pricing model, and we don't necessarily charge for the value. Once you start pricing up front and you get the hang of it, right? You get the hang of doing this, Let's get rid of the charge rates. Let's go to $1 an hour. Let's go to $1 an hour, still have timesheets, and have a time budget on all jobs. Let's get rid of the hourly rates, right? They mean nothing anyway. You've priced the job up front based on last year plus some, based on what you feel it's going to be. We move into value pricing now. And ultimately, you want to drive your margins up. Number 6 is where we get to monthly recurring revenue, MRR. It's the sweetest thing that when you know that all your overhead is covered and a profit every single month by the monthly, on the first of the month, whatever the number is, by the recurring revenue that you've got. Monthly recurring revenue. We need to drive these numbers through the roof. We need to sequentially move. You can jump to level 4 straight away, right? I wouldn't recommend going to level 5 straight away if you're not at level 4. Get to level 4, get the hang of the systems, the templates, then go to number 5 after that. And at the same time, working on number 6. With the firms that I'm coaching right now, we've got a massive push to recurring revenue. And with the process that I take them through, it takes 2 to 3 hours per client, they tell me, to move a client, all client meeting, administrative time, to move a client to monthly recurring revenue. If you don't have timesheets, bring them back. If you don't have timesheets, bring them back. But don't bring back the charge rates. Recurring revenue is for the known work, Mel, and the known entities. So let's say the client pays you $5,000 per year, 2 or 3 invoices for that. It's pretty consistent for that. It's known work, known entities. Then you package it up and you say to the client, look, this is going to be $500 a month going forward, but it also includes uncapped, unmetered phone calls, emails, and meetings. It also includes an annual general meeting and a goal setting meeting as well. Recurring revenue, $500 a month. It's a sweet thing. So we're going to move through and ultimately get to recurring revenue for as many projects as we can. But how do we get to the price? If we are getting rid of the charge rates, we need a different methodology to get to the price. And I encourage you all to put all your prices up ready for the new year coming up by who knows what, whatever you're comfortable with. But to help you with that, as we look at value pricing, I think there's 3 things that we need to look at. First of all is your value belief. To get to the price, do you actually believe you're worth it? Do you really believe you're worth it? What's your value contribution? Are you actually contributing to the client's condition? Are you actually making a difference? What's your measurable contribution? And what's the client's value perception, or how well, another way of thinking about it, how well have you articulated your value to the client? How well have you sold it? You get all 3 right. You get all 3 right, and you'll hit the sweet spot of margin. You don't get all 3 right, and you won't hit your number. You can have massive contribution, right? Huge contribution. You help this client save $100,000 tax. You got them off from the IRS, whatever it is, and the contribution was massive. And you really articulated that well, but you're a gutless wonder and asking for the right fee. Or you got high value belief and high value contribution, but you couldn't articulate that to the client. You won't hit your number. Or you got high value belief and you're trying to sell it to them, but there's just no contribution there. You won't hit your number. You get all 3 working and you'll hit your number, right? So strategy 1 around pricing, we can get that going straight away. Higher prices, fixed fee pricing. In fact, let's do this. I'm just going to stop sharing screen for a moment. Just going to pause that, do that. And I don't know how we're going to do this, but I'm going to show you something here. Bear with me. All right. Let's just see. Cool, here we are. So let's just make sure what screen I've got. Great. So talking about pricing, a couple of months ago, I had the firms I'm coaching contribute to a price list. And so I created, I created a menu of service and price list, and it's got over 400 items priced, regular services priced. This is a PDF, it's about 30 pages. This is all firms I was working with at the time, pricing, and then consolidate all the pricing. Question is, would you like a copy of this? If you like a copy, just put yes in the question area, put yes in there, and we will send it to you as a little gift. Christmas gift, it's your Christmas present, there you go, all right? Christmas present from Rob. So put a yes in there if you'd like it. I love it. Yes, thanks, yes, please. Oh, you've got it now, Nina, cool. Interesting comment from Nina. I have it, thanks, and I was shocked that we were so low compared to this. Yeah, these are regular accounting firms, mainly North America, that are just pricing different things. If you want it, pop yes in there, and we'll get it to you. Now, I'm not too sure how we do that, but I'll make sure we can. All right, so back to our regular viewing. All right, Merry Christmas. You're welcome. And boom, 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 and we should be back over here. Cool. All right, so pricing, numbers, process, structure. Let's talk about minimizing time and efficiency. So the question around this is, how much more efficient do you believe your firm could be? We have a fixed price up front, right? Drive time down. Our objective now is to get super, super efficient as fast as we can to get that job in and out, right? So our objective here is all about reducing time in Minimize. Now, here I've got a question for you. So as you look at the year, as you look at your clients, as you look at the way that you do it, you've got one answer only. And that answer is, what do you believe is the biggest bottleneck in, so the question is, you want to put an answer in, right? What do you believe is the biggest bottleneck in your accounting business that prevents you from getting work out faster? As in, what's holding up the throughput? Well, why is the system clogged up? What, the client wants their work done. You want it done efficiently. What's the number one thing, right, that is preventing fast throughput? Let's have a look. Keep it coming. All right, so we've got partner review, we've got me, we've got client data, dirty data, partner review, my own time in reviews, too much administrative work, efficient gathering of client info, not enough preparers, me, the owner, keeping up with client communications, final review, partners get a Guernsey here, qualified people, I'm slow, review, all info from client at once, quick question emails, collecting tax data, review of the work. All right, I think we have some consistent answers here. You already know how to fix this, right? You already know how to fix it. What you've just told me, and they're still coming through, are the standard 5 answers as to why we don't have fast throughput, why we work long hours, why we have inefficient process, why we have speed is not there, right? Here are the 5 answers you've just given, and it's the same 5 answers. Number 1, gathering all the information before starting. That was mentioned about 10 times, out of 30 or 40 answers there. Well, let's do that, right? Let's put a hard and fast rule on getting the information from clients. You didn't put this one down, but this is in line with the partner review part, which is self-imposed deadlines communicated to team and clients. While ever there are no self-imposed deadlines, as in the client is coming in on Thursday at 3, we need to get the work done, so partner, do your bit, right? While ever there are not self-imposed deadlines on every piece of work, then you're not going to get it done quickly. While ever you've got too much going on, instead of one job at a time and uninterrupted time, while ever you've got that going on, too much juggling, phone calls, emails, not concentrating, you're going to blow out the time dramatically, right? Productization and systems. We look at the way that it's done, whether it be a review process, whether it be documented systems on how we get it done, whether it be one way of doing it, not multiple ways of doing it. Productization and systemization is a big issue. And the last one is the technology. Is it seamless with you and the client? So, as their cloud system interacting with your cloud system. So these are the 5, and you already put most of those 5 on here. Let me tell you a story, and I'll come back to this with an answer. So a buddy of mine, Michael, was coaching a home builder, second largest home builder in the country, and their time to build a house was 120 days. Their work in progress was 120 days. Michael had 24 of the executives in the room, and he said, executives, how do we build it in 10? I said, mate, what have you been smoking, man? This is crazy. We're the second biggest in the country, and we do it in 120. And then he said the following. He said, look, I know it can't be done, but if it could be done, what would need to change, fix, stop, start, alter, redo, different system, different process, different whatever, to make it close to being done? He said, hypothetically, if it could be done. The word hypothetical is important because it moves the mind into the outside unreal world. So for the next 2 hours, they brainstormed this hypothetical perfect world building a house. And page after page after page after page of flip charts, they brainstormed a ton of ideas. Michael turned to them and simply said, just go and do that. And they did. And they didn't hit 10. They hit 43. What do you think going from 120 days building a home to 43 days did to their cash flow? Through the roof. Customer service, through the roof. What about referrals, new business? Through the roof, right? Because they spent 2 hours as a team working out, hypothetically, what they need to fix. I asked you that question for a reason, because I knew these answers would come out. You know what to do. So getting ready for tax season, I say to you, just go and do that. Just go and do that. Once and for all, sort it out, make some new rules, fix it, right? Fix it, and fix it once. Now, here's the thing. As we look at accountants, and we look at the numbers that are produced, average hourly rate, utilization, realization, what do they actually do all day? What do accountants actually do all day? Why does it take so much time to do the work? It's data, it's preparation of data, it's using some tools, and out it goes. Here's the answer. Accountants spend most of their day checking and processing data. Often checking and processing dead data, redundant data, dirty data, incomplete data. They get into a job, check, in the wrong column, move it around, right, put it down, pick up another job, processing, are they actually doing accounting work or are they doing administrative work? Now, I believe, as I've surveyed in the last 3 years, the answer to this question, accountants spend about 80% of their day checking and processing data. Why? Why? There's 3 reasons why, right? Number 1, at the client side, the data they provide is incomplete, right? You know that because it comes to you, not just incomplete, but it's also incorrect. You know, when it gets to you, you might as well have redone it, or not. They might as well have not even done it themselves, right? The clients don't know what they're doing. Their systems aren't fully integrated. It's not hands off, right? Example, my bookkeeping fee for 5 months was $918. For 5 months of bookkeeping, the bookkeeper external contractor charged me at $75 an hour, $918. Why so low? Because of the systems that I operate in, right? My revenue is managed by technology. The accounting's managed by technology. Even a paper receipt is snapped in the trash, and it all automatically comes together. So the bookkeeping job is minimal. The technology, the systems are better at the client side. I don't do any data inputting. I wouldn't know where to start. The technology does the data inputting. When it comes to you, at your side, right, inefficient systems as well. The client data doesn't seamlessly interact with your data. So consequently, you spend more time than needed. And then the third piece of the puzzle, when it goes to the government side, they have inefficient systems as well. So with all this inefficiency going on, it's no wonder it takes so much time. Now, the number 3 you can't fix, right? In New Zealand, just this year, personal income tax returns, gone, abolished, no more, no need. Because the government spent $2 billion, not a lot of money for a government, but it's only a small country. The government spent $2 billion over 5 years to improve their systems so that from the accounting software, click a button, file your taxes. That will happen, but it's not going to happen anytime soon. Doug has got a question. Do you help with all of these? Yes, namely the productization, systemization. You bet, Doug. Workflow is a big thing that we do. So if we go back to our 5 key points of what we need to fix, and we realize it's systems driven, let's put that into context of manufacturing a product, right? Manufacturing. So our objective in manufacturing a product is that we have all the raw materials, we get it in the door for those, out the door becomes a product. As we talk in your language, there are 4 stages of that, 4 stages of workflow. Stage number 1 is selling of the product. For example, a few years back, and he's done it again, Elon Musk at Tesla sold 400,000 motor vehicles in 5 days straight. The Model E, whatever one, the small one, right? He's pre-sold them. Now he's got a manufacturing program. He just did it again with the Cybertruck. $100 down, $250,000 sold in the first day or so, I believe. He's now got a manufacturing problem, right? When Mr. Musk and Tesla manufacture the car and it gets to the wheel station, the wheels, it won't be, damn it, there's a wheel missing. Guaranteed all 4 wheels will be there at the time when the wheels need to go on. If you think about the sequential flows of manufacturing and accounting product, first stage is selling, making sure the client understands what it is, what they've signed, the engagement letter, etc. Stage 2 is setup, job setup. Most of the work needs to be in setup, gathering all the raw materials, not starting the work until you've got the raw materials, send up the files, send up the budget, job setup. Stage 4 is doing the actual accounting piece. And stage 3, and stage 4 is reselling the job again. You think of breaking this down to bite-sized bits. Where are the bottlenecks? Where are the constraints? We need to fix those. And we fix that with process, we fix it with rules, we fix it with client communication, we fix it with team communication. You work out the bottlenecks. Is this making sense, team? You got 2 months to fix it. Give me some feedback. Give me some feedback. Lots of things coming through. Making sense, cool. Expectations, communication, Nina, you're right. All right. So now let's look at our third piece of getting ready for this next 2 months. I believe, as we look at the answer to this question, what's the ultimate purpose of your client relationship? As you start thinking about the end of the year, the new year, and we're going to go big and then we're going to go micro. What's the purpose of your client relationship? I believe, I've already said it twice today already, that I believe the purpose is that all clients are buying every service they need that helps them achieve their goals. All clients buying every service they need that helps them achieve their goals. So as you think about client goals, as you think about services, you think about all the things you can do. We'll send you that menu of services. Many of you requested that. As we think about the services and we think about who's buying what, a little example is to do what's called a client product matrix. And that is looking at all the services across the top, all the clients down the left, and who's buying what? Who actually is buying whatever services you've got to sell? And are they buying those things just because they need them? Or just because they've got them? Or are they really buying them because it helps them achieve their goals? If you want to be the trusted advisor, and that's an if you want a proper client relationship, then you need to make sure that you understand what the client goals are and you've matched services to those goals. If you don't, you're a commodity. I can buy commodity from 1.3 million accounting firms in the world. If you are not providing all services that help all clients achieve their goals, you are a commodity service. You're a grudge purchase, right? I don't want to put the gas in the car, but I have to make it work unless you've got an electric vehicle, right? I don't want to do my annual tax return, but I have to because the government says so. It's a grudge purchase. The minute you flip into, we're helping our clients achieve their goals, now we go from a grudge purchase, we go from a purchase that is about writing up history, now we go to a relationship that is helping your clients to make history. So how do we do that? We do that with a goal achievement process. This is a meeting. This is a meeting that you have with your clients to understand their goals, and then you go away from this meeting and you match services appropriate to the goals. Let me give you the flow of the meeting, and then I'm going to show you a template. It's going to be a bit crowded, this slide, so I'm not too sure how big your screen is, but it will be a bit crowded. There's a bit on this one. So this is a meeting we have with our client, about an hour and a half, existing client. We set the meeting up. It's a mandatory meeting. It is not a meeting that they can elect out of. We're doing with this all clients, right? Because we're going to sweep through the client base once, and we're going to meet with the clients and understand their goals and match services to those goals. You'll be amazed at what comes out of this meeting. We're going to open up the meeting with a welcome. I always want to help, and we're here to really determine, are we servicing you properly? So before we get into it, I need to understand the background. So we need to understand the background of what's going on today, the current situation. Digging deep on questions, you may know some of the answers to these, but many of these you do not, right? Many of these you do not know the answer to. Now we're going to segue and say, okay, that's what we've got today. Where do you want to go? What are your goals? What are your profit goals, revenue goals, lifestyle goals, time in the business, when you want to sell it, and so on and so forth, right? What are your goals? Now we're going to bring the meeting back to current issues. So what are the big issues to solve? What are the 3 biggest issues in your business right now? You know, what's the number 1 issue like solved immediately? Cash flow is typically the one, right? Then value, number 5. We can help you achieve your goals. If we could help you do that and solve your immediate problem, what would it mean to you? Number 6, consequences. This is a flow of the meeting. It's a flow, right? To achieve your goals, you'll need to do something different. What are the consequences of you not doing something different? Timing. So to get started on this, is this a later or sooner project for you? And then the last piece of the meeting is committed dates and follow up. Write some notes around that. This is a process team. When you systematically, we call it a GAP meeting, goal achievement process, when you systematically have meetings with your clients and you ask questions in this order, you cannot help but have clients buying more services. And the more services they buy from you, they're buying those services at a different margin, a value-based fees margin. It's a simple template that looks like this. Would you like the template? It's a Word file. You can modify it to suit. Let me know if you want it. Just put yes in, or hell yes, or yeah, man, love it. We'll get you the template. This is many, many years of observing meetings. If you want the template, we'll send it a Word file. I'm sure one of the teams on here that we can work out who we get this to. I see Wendy's online, which is good, right? So GAP meeting, yes, 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 yes. Debbie, I love that comment. I always love the way you make it seem so simple. Just go and do that. It is simple, right? It takes work, but it is pretty simple. Thank you, Debbie. Love the template. Yes, yes, yes. Now, as we wrap this up, I've got a question for you, right? And the question is, are you really motivated, right? How motivated are you to earn more and work less? So Carolyn, just a question on GAP meetings before we get to this. Just doing a GAP meeting with the same client each year? Sure, do a revision. Do one big sweep and let's do a revision every year. How are we going against the goals? Let's have a look at it. Are we matching services appropriately? Question I've got for you though. We're at the end of the year. You might be winding down. You might be ready to celebrate Christmas next year. You might be thinking about the new year. You might be still working. I don't know what you're up to, right? But how motivated are you for 2020 and to work less and earn more? Not motivated. I get it, right? Don't agree with it. Maybe. Very motivated. Or let's go, I can't wait. So please put a number in. I just want to gauge how well I've done my job here. Cool, got lots of 4s. Got a couple of 2s. All right, maybe the maybes are saying that, oh, you moved it to a 4, love it. 3.5, Rob, there was no 3.5. There was only 1, 2, 3, or 4, right? Who knows? Whatever it is for you, I would like to help. Yeah, interesting point, Don. I don't mind working as much as I do, but I'd like more money, or the other way around. Absolutely right. And Nina, you're on the money. I'm motivated to work less and earn more as long as I can keep a personal and great relationship with every client. You bet, right? And there's a whole process around doing that. So I would like to help you. I'm going to get those tools to you. So the tools of the menu of services and the GAP meeting. But most of you need some additional help, right? You need accountability, you need further detail, you need coaching, and I would like to coach a couple of you. Here's the criteria. Number 1, and I've put my foot down on this, you need to be doing more than $1 million right now, right? For calendar 19, if you hit $1 million, let's talk. Number 2, you need to be ambitious. You might be at 1.2 now, but I want to get to 5, or I want to get to 3. Or ambition level, I've got a profit time index of 220, I want to get to 600, right? You need to be ambitious. So number 1, if you'd like me to work with you, ambition level, size, $1 million plus, $1 million to 10. Number 2 is ambition level. And number 3, right, is that you're actually coachable. You actually do get things done. If you've got a track record of just doing nothing, then why is this going to change? If you have been implementing, but you want some more guidance, right, then let's talk. I would love to work with you to help you achieve your goals, right? I'd like to do that in a coaching environment. If that's you, send me an email to rob@robnixon.com and we'll have a discussion, right? I can't work with everyone. I don't work with everybody. If we can get on and you've got good potential in your business, then let's have a discussion. Shoot me an email, rob@robnixon.com. In the subject, put coaching. And then this is not guaranteed that we'll work together at all. It's very much, let's have a discussion to see, based on where you want to take your business, based on what you've already done, can I actually help you do that, right? And if that's the case, then let's talk, right? Let's talk over the next couple of weeks, but send me an email, right? It's on the screen, rob@robnixon.com, just subject coaching. I'll come back to you quickly with some thoughts, get to know each other a bit, and we'll both decide whether we can move this forward or not. So I do hope you've enjoyed the webinar. I do hope you've got some ideas that you can put in place for the rest of this calendar year, the new financial year. Hey, here's a thought. What about for 2020, we make the 2019 revenue the 2020 profit? That'd be fun, right? That'd be a lot of fun. Anyway, Merry Christmas, Happy Hanukkah, Happy New Year, whatever you celebrate, enjoy the holidays, and looking forward to working with some of you in 2020. All the best. Bye-bye. Have fun.